Welcome back to Small Caps. My name's Kerry Stevenson, and today, exciting news. I've got Andrew Corbett. He's the Managing Director of Kingston Resources. And if you don't know by now, you should do. Their ASX code is KSN. Andrew has a big smile on his face because they put an announcement out today, and I said, let's get you on Small Caps and let's tell the market why you're so excited. It's about the PFS. Let's talk about that. Andrew, welcome to Small Caps. Welcome back to Small Caps.
Kerry, thank you for having me, and it's a pleasure to be here and talking about the PFS out that we've just released to the market today. It's certainly a very exciting time for Kingston shareholders. It's been a 3-year journey for us. In 2017, actually November 2017 it was, we were 49% of the project.
Yep.
And here we are 3 years later with 100% of the project. 17-year mine life, 130,000 ounces a year production, and all-in sustaining costs around $1,160 an ounce. So we're very happy, and shareholders hopefully will be too.
Any surprises in that? I mean, I love that, a quick overview of it, which is 17-year mine life. Let's just reiterate that. All-in sustaining costs of $1,159 when you've got, and I'm assuming that's Australian dollars.
That's right, yeah, all Aussie dollars. Yeah, and we don't talk in the US dollars.
Just checking. Somebody will come back to me and ask the question. A 17-year mine life, all-in sustaining costs of $1,160, let's call it. And we've got an Aussie dollar share price of about 2,500. So the metrics are stacking up quite nicely. Were there any surprises with this PFS? Did the numbers stack up better than you thought?
Yeah, it's interesting. We're really happy with the CapEx number and where it's coming at, and that's the benefit of being brownfield. So you've got to remember 15 years of production with Placer, where it produced best part of 4 million ounces, and that closed in 2004. So we get to leverage off all the infrastructure and the facilities that are still there, including the processing plant. It's going back in exactly the same footprint. So we've got basically no earthworks to do for the processing plant. We're using the current haul road. We get to drive up and down that haul road today. So we don't have to rebuild the haul road. So all these things have added up to a lower, capital intensity of cost per tonne of processing capacity. And that's the big benefit. So that's really a really positive surprise for us and for everybody. So at 283, the CapEx came in at Aussie 283. And that's a really good number. In terms of the mine life, we were expecting to be, well over 10 years and over 15. So we're pretty happy with that, where that's come out as well. So that's a really good positive thing. And the reserve is interesting. We've got a 10-year reserve on our first maiden reserve. It will get better. We will continue to drill. We've got the 2 rigs going at the moment. So we do expect to add to the reserve and the resource inventory over the next year.
Andrew, I just want to go back to those people that don't know, because there will be some that haven't heard of the Kingston story today, and you're a very happy man. It's a great announcement that you've put out to the market, and shareholders will be pleased. But let's just go back historically. 2004, in Placer this was a good mine at the time. Why did they walk away in 2004?
So in 1999, Placer moved to a long-term gold price of US $300 an ounce. And so when they were running their numbers and looking at Misima on that, and at the Yamuna pit, and that was in production and producing, at US $300 an ounce, they're not going to do the cutback. And so they stopped. And so they stopped mining in 99, and then they processed for another 4 years to 2004. So that's sort of the bit of the story in the history. So we're now sitting here at US 1,900 or $1,900 an ounce today, and we're sitting here looking at this cutback and going, well, we're definitely going to do it. So, yeah. And that's the beauty of what we've got so far, is we've been able to add some early ounces in terms of feed, so we can get into the mining straight away while we do the cutback on the main pit at Yamuna. Yamuna's over 90% of the ounces, so we're going to have some small, a smaller starter pit at Nona, and then move into the big ore body at Yamuna. Yamuna's 3 kilometres long.
Oh wow! Okay. Yeah. Can you? I think you've got a slide that I'd like to see, just which gives a bit of an overview picture of the project, where it is, and for those people that don't know, because as I said before, there'll be people that don't really know the full Kingston story. So Misima, as you can see, ladies and gentlemen, is down there in red. That's the Kingston Resources Gold Project.
Yeah, so you can see it down here.
Yeah, so could you just talk through a little bit more about this? Access, the resource, and a bit on the timing of all this.
Yes. Yeah, no, fantastic summary slide. And Kerry, this is why we need your help to get the story out there and do more of these calls. So Misima is a beautiful island, and it's basically 600 kilometres east of Port Moresby. There's 3 commercial flights a week. PNG Air fly in there. There's a 40-seater Dash 8s go in there Tuesday, Thursday and Saturdays. So we don't, and that's what I talk about, this brownfields advantage, in that we don't have to build an airport. We don't have to sort out a contract air charter. We've got commercial air flights 3 times a week. So why? Because the mines, Misima's been producing gold for 130 years, a lot longer before we were involved and a lot longer before Placer. So pre-World War II, it was all underground, high-grade undergrounds, about 10 grams per tonne. They produced 240,000 ounces from Misima. Then in the 50s to 70s, there was a lot of exploration. And that's where the open pit came from, but in the late 80s and 90s for Placer. And total endowment of the project today is the 4 million ounces that they produced, and the over 3 million ounces that we've got. So 7 million ounces of endowment. It's a really interesting island. I call it the gold island because it's just been producing gold for a long time. And then you've got the scale. So we've got a resource now of 144 million tonnes. I think at the moment we've got about 68 million tonnes in the indicated, and 48 million tonnes of that is in our reserves. So what's given us the 1.35 million ounce reserve. And a large resource. And like I said, we're drilling. 2 rigs are going right now, and those rigs are focused on infill and extension. So lifting and upgrading the inferred ounces so we can increase that reserve. And the brownfields nature is one of the best parts of Misima. So when the project was first built, everything came out of Townsville. Barge, the fleet was put together and built in Townsville, put on a barge, sailed over to Misima, the trucks were driven off. All the plant and equipment that wasn't obviously already sourced in PNG came from Australia and was barged in. So the access is brilliant. So we've got air, sea freight, we've got accommodation. We currently rent houses that were built by Placer in the 80s. They could do with some new furniture and a bit of a paint job because they're from the 80s, but it's fantastic. It's a great start, right? We do need to build a new camp, but it'll go back on the same site. So we use the haul road. We're digging up Umuna and Ewatanona, which were both mined previously. We're not disturbing new ground. We're basically going back into the old areas. And when Placer they ran for 15 years and they trained 800 Misimans. And a large percentage of those Misimans still work in mines today, but they do FIFO. And that's why, again, comes back to why there's flights and why there's access to the island. So they basically fly in and out to Lihir, to Oktedi, to Wafi, well, hopefully to Wafi soon, Hidden Valley, and Simberi. So there's a lot of guys that live at Misima and fly in, fly out all over PNG, and girls. So that's a real benefit for us, right? And as I said, excellent flight access and freight availability. And we really are following in Placer's footsteps. We are building a 5.5 million tonne mill. They had a 5.5 million tonne mill. We are basically replicating their process design, which was very simple and reliable. And that's exactly what we're doing this time as well. Literally driving up the same haul road and building the mill on the same location as Placer did.
Andrew, do you think that the market doubted you at points in time? I mean, this PFS shows that this is a robust and it will be a mine. Now, the wonderful thing, as you've mentioned, is that Placer, there's so much infrastructure there, so which means that the capex isn't what it would be with others. But do you think that the market for a while there doubted it, and you had to push a little bit, and this has kind of validated what you knew all along, or were pretty sure?
Yeah, no, absolutely. So I think the market was worried about, obviously, the capital intensity being, a large project, large plant. And I think we've shown that now and demonstrated that with the PFS. And the other thing the market wasn't sure about is the margin. What's the margin going to be? Because this is not a high-grade project, but it's not in my mind about grade. It's all about margin. What's the margin going to be? And so at an all-in sustaining of 1159, 1160, the margins are excellent today. So we've now demonstrated that. And if you step back even a little bit further and say, well, why are the margins so substantial, robust, attractive, whatever words you want to use? And it's quite simple. It's very soft. So the energy required to extract gold from Misima is less. So low powder factor, drill and blast costs are low. The crushing costs are low. The grinding costs are low. So it's all about how much energy it takes to remove that ounce of gold. And in Misima's case, it's lower. So we've got a 16 megawatt power plant running a 5.5 million tonne processing plant. Now that is materially different to other projects, particularly in WA or all other parts of the world. So it's just a low cost project because of the energy to extract the gold.
Okay, so there's a couple more things I want to ask you before we move on to, there's another little announcement that I want to cover. Let's talk about some timings for this. PFS is out. What's next?
So drilling now, 2 rigs running now 24/7, resource and reserve upgrade by mid-year. So that'll be June, July 2021. We aim to submit our environmental approvals by the end of 21 and looking for full mine approvals by the end of 22. So we've got a pretty focused strategy to aggressively move along into approvals phase, continue drilling, and definitive feasibility study will commence straight after the reserve and the resource upgrade coming in mid-21. So we'll be doing engineering studies second half of 21.
Sounds like if there's a plan, there's action, there's a good capex, there's a long mine life, you've got the PFS done, you've got a great all-in sustaining cost, ticking lots of boxes there. There's another little box that I just want to mention that I think came with the announcement today, and that is the new chairman coming on board.
Yeah, that's right. So Mick Wilkes has agreed to become chairman of Kingston Resources, and we've announced that this morning as well. And that's a huge move for little Kingston because Mick, as most people know, he's built at least 4 projects that I know of, and it's a material amount of gold production and copper production that Mick Wilkes has added in his career, and that's a fantastic lever oversight chairman to have because I've operated in gold mines. I'm a mining engineer by trade, but I haven't built a gold mine. So that's really important that I've got that sounding board and that oversight from our chairman. And the other important thing a lot of people don't know about, Mick worked in PNG for 10 years and he speaks Pidgin. He has a network up there. He has relationships up there. He has experience up there. So all of those things add up with our current board and management as basically the right team to build the project. I do want to acknowledge Tony Wiebe, who's been our fantastic founding chairman since we've sort of rebirthed Kingston in mid-16, and he remains on the board. And Tony was the founding chairman of YTC, which built the Hera Gold Mine today, which is obviously one of AMI's core assets. So Tony's been there and done that before, but not as many times as Mick.
Well, and he remains on the board and he remains committed to the future of Kingston. I think you've kicked lots of goals today. Any last final comments before we wrap up? Why should investors now start to stand up, take some notice because you're kicking the goals?
The key is we now have shown the market and delivered to the market evaluation for Misima and some numbers that people can now go away, digest and understand of what the opportunity is for Misima, what the opportunity is for Kingston shareholders, but most importantly, what's the opportunity for the population and the landowners of the Misima Island. So we have a strong support base there. They are mining focused community. They want the project to be rebuilt and they want us to hurry up. So that's the key takeaway, is that we've got an economic project that will get built. We're very supportive shareholders who are going to be very happy with this result and very supportive community.
Well, I've got to say, Andrew, you are one happy man today. It's been an absolute pleasure to have you back on Small Caps, especially with such great news. New chairman, great result with the PFS. We look forward to future news flow. And thanks for chatting with us on Small Caps today. We'll get this out and it'll be an interesting future for you. Thank you so much for joining us today.
Thanks, Kerry, and really appreciate the support. And like I said, we need to do this more often so people understand the story.
Absolutely right. Well, we'll see you again soon.
Thank you.